We need to go to some stock picks. Ricus, let's start with you. You're going with Shoprite.
Yes, Jean-Pierre mentioned it at the start of the program as a sort of an alternative to Pepkor, and I think that's my thought as well. If you take a look at what happened with Pepkor in a consumer market like we have, focusing on your lower income market and executing that strategy very well, I think the same is going to be the case for Shoprite. They also do a quarterly update. Their last results were terrific. I think they're executing their omni-channel very, very well. And considering where they are priced at the moment, they haven't been cheap in a very, very long time, but they're certainly not expensive. Technically, I like the picture, and I think if you want to be in the consumer side, Pepkor on the one side, Shoprite on the other.
Yeah. Jean-Pierre, you're going with Optasia. We touched in the beginning of the show. I'm going to add a quick question to it as well. Someone said to me, is this the founders selling more? My understanding is there's lots of lock-ins. Some of those lock-ins are 185 days for founders, management 360 days. It's probably just the market working. And is your stock pick today?
Yes, I think we should put it in context that the market was down, call it 2% today. Yeah. So then if your stock is up 2%, that's not bad. You've outperformed by 4%. Would have been nice if it popped to above 20 Rand, but 19 Rand 38, exactly 2% up from the 19 Rand placement price is not bad. And that gives you an opportunity, and that's why it's my stock pick. You can effectively buy it now at not much more, 2% more than the placement price. And I think they still have a couple of years of very strong growth to come. The big test will be, call it 2 to 3 years from now, to see what happens to bad debts, because they have moved from scoring people for airtime to scoring people for unsecured loans. And that for me is a different demand. It's a different customer. It's a different credit risk. And through their guarantee structure that they have with the banks, because you don't see the loans on their balance sheet, you don't really see the bad debts on Optasia's own balance sheet. It's a balance sheet light business model. But you'll see it indirectly in 2 to 3 years when some of those guarantees maybe get called by the banks. If the bad debts turn out to be worse than expected, that's going to be the test. But for the next 2 to 3 years, before we get to that point, there's a lot of expansion opportunity, whether it's in Asia, other operators throughout the world in emerging markets. And as long as you keep on growing, then sometimes it doesn't even matter if your bad debts are slightly higher than what you anticipated, because the growth in the book makes up for that. So I do think for the next 2 to 3 years, it's going to be a good story. And if you can get in at the bottom range of what the IPO price was, for a business-like model, very high returns on capital, I think it looks interesting here.
Yeah, that's a good point. I mean, if you put an allocation and then you got your 14% and you're disappointed, for an extra couple of percentage points, you can get the rest of your allocation. Would it be nice to see it pop? But you've got a second bite, and maybe that's the key point. That's all for Stockwatch today. Thanks to our guests, Ricus Reeders, PSG Hole-in-One, Ruimsig. You're going with Shoprite. And, of course, Jean-Pierre Verster, Protea Capital Management, going with newly listed Optasia. Up next, the close. Stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.